Rushabh Sheth now joins us. Let's take our conversation forward with him to understand where markets are headed, what his view of the market is, and very interesting picks in his PMS schemes. To stocks like Tata Communication, why have they made part of his portfolio preference? Rushabh, good morning. Thank you for joining us. I'm meeting you after what, 16, 17 years?
Yeah, it's been a long time. Yes.
Almost more than a decade. Yeah, it's so good to talk to you. It's good to talk to you.
On the show, Nikunj.
So what should we start with? Your view on the market or your positioning in terms of your preferred picks?
Nikunj, I would prefer not to talk on the stocks individually, but happy to talk on any sector, any other issues.
Start with your portfolio positioning and their preferences. Financials, how would you define them? Because that's the space where right now everybody is excited because the lay of the land, the trajectory for financials and the economy, everything is supported. How are you betting on financials?
So from our perspective, our weight as compared to the benchmark is much lower. We are maybe about 10% in financials as compared to the benchmark, which would be upwards of 30%. So our weight in financials is significantly lower. And from our perspective, what we see is, you're right, that the larger banks are in a sweet spot where you see credit growth, you see strength on the balance sheets. But we think that there are other opportunities which are more exciting to us. And that's why you see our weight in financials being slightly lower.
When you are looking at the construct of your portfolio, are you looking at themes or it's completely based on micro?
It's completely bottom-up, Nikunj. We are not really macro investors. We are bottom-up investors. We kind of look at each individual holding, each individual company on its standalone merit. So from our perspective, we are completely bottom-up investors.
A lot of pharma in your portfolio, whether it is Alchem or Jubilant Pharmova or perhaps Cipla. And some would say that pharma is out of fashion. There is a challenge in terms of whether generic prices is headed. And look, the business got re-rated after COVID, but post-COVID, it's getting derated.
So, Nikunj, from our perspective, the way we look at pharma is we are more skewed towards the domestic pharma. We think that domestic pharma offers a secular long-term growth opportunity. And therefore, you see names which are predominantly domestically oriented, not so much US. Yes, there is some US exposure for companies that we own, but that's significantly lower. And also, they constitute significantly lower part of their overall profitability. Our thesis on pharma is that, if you look at last 5-7 years, you've seen a lot of misallocation of capital to growth opportunities in US, which kind of did not pay off. And we are starting to see significantly better capital allocation, at least from the top pharma companies now in the last 2 to 3 years. If you look at most of the larger pharma companies and also the ones we own are now pretty much net debt free, so they're cash positive. And we see them generating significant amount of free cash flows going forward. Our sense on pharma is that, pharma is where maybe FMCG was 10 years back in terms of growth opportunity, at least from our domestic companies' perspective. And we see a reasonably long runway for growth for domestic pharma companies. So our thesis on pharma is very bottom-up in terms of companies, but also from a secular growth trend, we think that these companies are in a sweet spot. And keep in mind that it's a very large domestic opportunity in pharma in general and healthcare on a broader basis.
Rushabh, I'm intrigued to know as to why is private banking completely amiss from your top 10 holdings? Not just private banking. I mean, since you just mentioned that you are a bottom-up guy, even some of these PSU banks are extremely cheap and the market is finding value in them.
So it's a question of where we find relatively better opportunity. As I said, I told Nikunj earlier as well, that we clearly see that these banks are in a good position, and we don't doubt that. Only sense for us is that valuations on some of the banks are not cheap, apart from the PSU banks, of course. And from our perspective, there are other better growth opportunities in the economy which we think we are more excited for than some of these banks. So from our perspective, it's kind of more a relative opportunity set, which we think is outside of these banks. And that's the reason why you see less of a presence for private sector banks.
Interesting. Also quite interesting to see that you're pretty bullish on the media space. I know we're not listed, but I see TV18 Broadcast, Z, all of it in your top 10 holdings. Tell us, where do you, or rather, how much value do you really see in the media space in the long haul?
Well, I think that is a question that I should be asking you guys, but my sense is that we see a significant opportunity. There are 2 or 3 broader trends you see in media. Consolidation is happening as we speak. Top 3 players will control a significant portion of the market once Sony-Z merger goes through. And from our perspective, as the economy moves from say $2,200 per capita to maybe $3,000 or $4,000 over the next 5 years, we think media will do very well, because I think a lot of incremental spends will be driven by media and entertainment. And we think that these companies are in a sweet spot. At this point, they are at a low point of their cycle, where you're seeing challenges in terms of environment because of advertising growth slowing down, because of inflation, or subscription growth not coming through because the NTO2 is subject to this. But we think that these are temporary challenges, and we think that the longer-term structural secular path for growth is very, very strong for media business.
Rushabh, when people ask our opinion on media companies, I just remind them we started a conversation with no stock-specific comment. So obviously it applies to us also that we can't talk stocks.
We can't in any case, right? Ours is the question, not to give our opinion.
No, I agree. So I think from our perspective, we think that there is a very strong growth prospects, and especially as the economy evolves, you will see significant amount of spends on media and entertainment over the next 3 to 5 years. So we think these companies are in a sweet spot. We hope that you guys would have been listed, but unfortunately you are not. So yeah.
Yes, we are not listed. We are privately held. Good morning. The other question I wanted to ask you, since Aisha was going through what you don't have, I'll stick with that theme. Auto. We saw so much of that leadership, right, in the recent bull run. You only have Tata Motors DVR. I went on your website where you're talking so much about electric vehicles, but we only see Tata Motor DVR. On your website, you're so excited by SBI YONO and how it's attracting digital-first businesses, but still no SBI in the top 10.
No, we own the bank that you talked about, and we own the company that you talked about. We think that they have leadership in EV in India. And we think, from our perspective, it's a very interesting space to be in. It's not going to make any money for them in the near term, but I think it's a more longer-term growth driver. And from our perspective, some of these companies will have already assumed leadership in their space, and hopefully they kind of continue to kind of build on it. Our sense is that the EVs will change leadership in the pretty much every category of vehicles as the powertrains change, and investors will kind of have to move with the changes in the powertrains.
Okay, so you're betting on EV with Tata Motors. That is, of course, turning out to be the big one. Bharti Airtel, today you also own that, and I'm going to take that as the opportunity to talk about that more. Yesterday was that big RIL EGM where they're talking about a 2 lakh crore rupee capex. All eyes now on Bharti Airtel, whether we're going to see a price war of sorts if you're going to have Reliance Industries come out with its 5G around the valley. An educated guess, even Bharti Airtel will. A lot of action in the media space and the telecom space.
Yeah, absolutely. We think, again, telecom has consolidated significantly. The top 3 players now control almost 90% of the revenue market share. And from our perspective, that's a significant consolidation in a market which is where we are today at maybe about $3 ARPU, or not $3, actually about $2.50 ARPU now. So from our perspective, that's a huge opportunity, because incrementally it's going to be difficult to kind of shake the revenue share the top 2 or 3 guys have. And therefore, as ARPUs move up, as new technologies like 5G are rolled out, the existing players will get stronger and stronger.
Let's look at next 3-4 years, and one thing which we both know is that large gains are made when there is a re-rating of the sector, and big losses are registered when there's a de-rating in the sector. Where do you think for next 3-4 years there could be a combination of earnings growth and re-rating? Because that's the time potentially you hit a big outperformer.
So, Nikunj, from our perspective, we can only control earnings growth. The re-rating is dependent on how market sees these opportunities over the medium term. From our perspective, as we mentioned, telecom, pharma, even media will see a significantly strong earnings growth over the next 2 to 3 years, if not longer. There are other bottom-up ideas across sectors, including some in the financials, which will also see pretty strong earnings growth. It's going to be difficult to say where the re-rating and how much the re-rating will happen, because it's something that it's very difficult to predict and to say. Things under our control is the fact that we think that earnings growth will be pretty strong in these companies, and as the earnings growth pans out, we'll have to see how the market foresees this earnings growth.
Is it a conscious strategy rather that you have avoided the Nifty 50 names, I mean with an exception of, let's say, SBI and Tata Motors, but generally I don't see too much of Nifty 50 presence. Is that the USP of your scheme? I mean, are you consciously running it that way?
Again, Nikunj, we are bottom-up investors. We don't look at it. Though we have a high active share, as we call it in our business, more than about 95%. We are more driven by where we see the best opportunity. We run concentrated portfolios, about 20-25 names. So therefore, that's another, maybe I think it's different from what you see in terms of the broader index. And our ideas are completely driven by where we see the opportunity. We honestly don't care too much about the index and how much of that is represented in our portfolio.
So to understand the thought process of the portfolios which you run, is it centered around value? Is it centered around growth? Every scheme has a different style. Every fund manager has a different proposition. I mean, there are schemes which have Coal India as their top holding. There are schemes which have Asian Paints as your top holding. You've got Tata Communication as your top holding. So what would be the defining moat and the USP of your scheme?
I would say we are growth at reasonable price kind of investors. We are typically early cycle. We try and identify opportunities early in the growth cycle. Our average holding periods are about 5 years now. So once we buy a stock, it remains on our portfolio for a long time. And typically, this is what we see as our USP, if you want to call it, in terms of how we look at investing. It's very bottom-up driven, very much driven by each individual business, and we own various kinds of businesses. Of course, you can only see top 10 in that, but we own a small logistics business, we own an auto bank. So we have a lot of diversity in terms of the portfolio, again, coming from a bottom-up philosophy. And we are typically pretty long-term in our view. So, as I said, our average holding periods is about close to 5 years.
Rushabh, so great to have you on the show, and I hope you're not going to wait for another 16 years to come on TV next.
No, thank you so much. I really appreciate you having me on the show. Thank you so much.
Thanks. Good chatting with you. Okay, let's just revisit what the market has settled in at. We started